Hey, good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Thursday, September 20th, and we got a few economic news releases here today. So we'll jump right on into it. We'll start off with the weekly jobless claims, and we had 385,000 reported last week, and we figured it was going to taper down. The forecast was to come down a little bit to 375 for this week, and we had 382,000. So still above the 380,000 threshold, so not too good numbers right there. We had the basically PMI report for September, and we had 51.5%, 51.5, and came up 51.5. So we're just basically on the edge of above contraction. So we're just very small growth there at 1.5. Because remember, when I say that, anything above 50 is expansion, and anything below 50 is contraction. So, so basically, that's a good economic indicator for the economy for the PMI report. So we're just hanging in there right now. So leading indicators is another item here to look at for economic news here. We had for back in July, we had a 0.5% increase. So their forecast short-term negative 0.1%, and base came at negative 0.1%. So forecast came pretty accurate on that one. And then we got the Philadelphia Fed Index, which is the manufacturing in Philadelphia region. So back in August, we had a negative 7.1, so they were contracting in that area. We figured pull back to a negative 0.4 or 4.0, and basically pull back to negative 1.9. So didn't contract as much as we anticipated, so that's obviously good news right there. And that's just something else. Sorry about that, folks. So jump over to headline news here. And stock market is currently down right now, and most of that is, well, we had our economic news release we saw right there, so the leading indicators weren't the greatest. Philadelphia, the PMI wasn't good, and obviously the jobless claims. So the biggest thing is here, it's not just us. China and Eurozone are having some big concerns right now too. So their PMIs are showing a decrease each month, just like us, and that's where the concern is, because basically because the global economy is so intertwined that if we can't sell to China, or we can't send stuff to Europe and such, how do we grow? How do we expand our growth here in the U.S., our economic policies here and stuff? So that's going to be the issues right there that has investors concerned. So jump over the bond market, see how they're handling everything. So right now for the day, it's down about 6 basis points, but if you look, it's higher up on the chart. So we're actually getting an improvement in the interest rates here. So we're up above the 104.60 level now. So we're almost about 20 basis points higher than what we left off yesterday. So here we're at 104.44. Now we're here at 104.63. So we have an improvement in the pricing for the interest rates, which is obviously a good thing. But again, caution here, we do have some opening gaps here that will close at some point here too. So I'd be very cautious if you are floating any interest rates out there. All right, folks, have a wonderful day. Thanks for stopping by and watching, and I will see you guys tomorrow. There's really no economic news releases scheduled for tomorrow, so everything will be based on the headline news. So it's possible it could be short and sweet as well. If you guys like these reports, please stop by mikesdailymarketreport.com and subscribe. We'll have them emailed to you for free every day. Have a great day.